Gina, I feel like I need a cocktail now. But anyway, welcome. Our first stock literally is PayPal. Goldman just initiated coverage on the space with Square and PayPal, giving them a buy rating. What do you say about PayPal, which has been a hugely controversial name lately?
Well, so, this is an interesting name. I do think that macro trends support it, and that's a big kind of underpinning for the Goldman argument, which is that as we go back to, consumption and consumption gets back to regular levels, PayPal and Square both should be beneficiaries. Now, Lido Advisors actually owns PayPal, and we are buying this very controversial name because we do think that the market is there and the recovery is there for them.
And so when we all talk about recession and stagflation and, this and that and the other, Gina, these stocks are poised to benefit from a stronger economy.
They are, but PayPal and particularly Square also benefits from the smaller, the smaller purchase item. And that's the part of the economy that's sort of getting back up to kind of pre-recession, or rather pre-COVID levels. And that's a segment of the market that was just shut down for a long time and has been recovering for the last 6 to 8 months and will likely continue to recover for the next, year or so. And yes, the potential for recession is there, but it won't be in the small ticket items.
All right, Gina, next up, speaking of not small ticket items, RH, also known as Restoration Hardware, Jefferies upgrading the stock to a buy and cutting its price target.
Yeah, so this one's an interesting one. The argument here really kind of revolves around the notion that it's trading at a discount relative to where it used to trade. And I guess that raises the question, will it recover to where it used to trade? And I'm not sure that's going to happen right now. I think that the market is really getting very picky about what it is buying, how much it is paying. And that, interestingly, was the argument for Restoration Hardware was, this is ultimately discounted, is a great value, and you should pick it up. But I think in the face of rising interest rates and crimped budgets because of higher mortgage payments, I'm not sure that this as a luxury item will necessarily recover as quickly.
Yeah, Gina, I really think you're hitting on the thing I was kind of thinking about. Inflation, highest interest rates on mortgage payments, fewer houses out there to even buy. Don't those all create some pretty big headwinds for this stock?
I think so. And if anything, I would say that as mortgage payments go up, that's an immediate impact to your household budget. You're probably going to, scale down the bits and bobs you're going to put into your house, which is where Restoration Hardware makes its money.
Yeah, fancy end tables for sure.
Gina, let's pivot now to our third and final drink of the hour, and it's Rivian. RBC is confident in their production ramp. The stock obviously has been challenged, and we sort of heard Too Simple allude to this earlier on, but Rivian came public with a very full valuation. What do you do with the stock now?
Well, so this is one of those that, quite frankly, last year was the year, or the year before the pandemic was the year to buy anything electric. And we saw everything electric getting bid up like crazy. Rivian was a part of that. They IPO'd into that. And as you said, it was a very full valuation. Now we have seen growth get taken out, back behind the shed and shot for the last 12 months, probably a little longer. And Rivian was hurt by that. However, the story behind the electrification of cars is a strong one. The question is does the valuation make sense here? I think that longer term, it's a good story. I just think that right now the market is being very picky about price. And so you do have to be a little careful, even at this lower valuation. It's still actually high relative to the rest of the market.